Morning all. How are we all doing? How's everybody? Poor old pound, eh? Look. Poor old pound. Very sad. Never mind. So we just had the news on the pound. We are officially in recession in the UK now. Well, not officially, because it's got to be 3 months in a row. It's got to be a quarter, actually, of negative to be in a recession officially, but certainly on our way, aren't we? So, yeah, not good for the pound. We'll go through that in a second. Possibly means we may freeze our interest rates as well, which could be even more negative pound, but we will see. Afternoon, Danny. Morning, even. One of those mornings. Morning, JC, Monkey Man, Baggy, Roman, Kennelly, Mumo, Amy, Evans, Neo, Liberator, Daniel, Francesco, another Daniel, and Virginia. How are we doing? Good morning. So, this obviously isn't good. It's not just a 0.7% retraction in the economy. It's an 1% retraction in the economy. So it's worse than forecast. This GDP figure, when you look at the current fundamentals for the pound, which are here, basically interest rates going up keep on top of inflation, and interest rates going up mean that your GDP contracts, because if inflation drops, interest rates go up, everything in business becomes more expensive, customers start spending less, borrowing costs you more, so therefore businesses tend to make less money. Your GDP contracts, you go into a recession, and it becomes a spiral. Unemployment goes up because obviously the businesses are doing bad. They have to cut costs. First cost is people. So what this means is potentially they've gone too high with the interest rates, which means they will need to freeze them. So this could be, we will need to wait and see what Bailey says next time he speaks, but this could be the start of a slight decline in the pound. Obviously, we know we're looking at a potential slight decline in the US dollar as well. So the fact that I'm long pound US dollar, this thing could just pop like this for a while now, because obviously we're expecting both of these guys to contract. So we'll see. But certainly a negative reaction this morning to that. It's not massive at the moment. We have just pulled straight back into limit orders, which are triggering. We haven't hit ADR. So I posted in the Telegram group this morning, my pound US dollar, I had 2 trades on this, one taken by the EA and one aggressive drawdown control position. I put a break-even stop on them ahead of the news in case this happened. So I've got out of both of those at a break-even. The EA has just placed the trade back on that it took because we had a reversal alert on M5, as you can see here. There's your reversal alert. So it's placed that entry. It's coming down again though. So what I've done is I've placed my aggressive drawdown control back on. So if this does become a bounce and the market isn't too worried about it, we should get a V-shaped recovery on the move, in which case then I will re-enter my aggressive drawdown control position and hope we get negative CPI figures on the US this afternoon. So this afternoon we've got CPI. This is the big one for the US. If this CPI figure comes out as a negative, the US dollar is going to collapse, which means that the pound US dollar will rally. So I'm looking at that as the scenario, basically, for entering a new aggressive drawdown control position, which will be there. That will bring my average back down to roughly an ADR. And if I can get back to the top of that, I think I might just cut this thing and go, Christ, you're a pain in the arse, pound US dollar. I don't want to talk to you anymore. We'll see. We may, obviously, London's about to open up, so we might get a continued drop in it. We'll see what happens. But, morning, Lajtman. Not heard your name before. Morning, Mick, Mac, Andres, Christian. GJ shorts on the table. Well, everything short with the yen. Yeah. I mean, I want to be short everything against the yen at the moment. However, US dollar's not rallying against the yen. We've got the gap fill to in play, which is on its way now. So we got a little bit more upside movement on this yen, potentially. However, the US dollar is going to move this afternoon on CPI. If that CPI comes out as positive, that's going to put more pressure on the Japanese to intervene and drive that yen through the floor, or through the wall, through the ceiling, even. One or the other. Floor, ceiling, wall, one or the other. It's going to go one of those three ways, isn't it? But yeah, obviously, we haven't had any more talk about intervention overnight from the Japanese. There's nothing actually overnight, no news. We've had PPI figures came out just under forecast, slightly negative yen, but nothing about intervention. So there's no overnight news. Obviously, the GDP for the UK was the only thing. Right, here we go. So they've already started talking about it. Pricing in a 1/4 point hike by end of year. So market's got 3 minutes to the open. So just as what we were talking about was a 0.75 increase by end of year. Yeah. They then revised that forecast to maybe we might go for a 0.5 because CPI seems to be coming down. And then now we're talking about a 0.25. So this should become terminal rate, 5.5% on the pound. So as I was just saying earlier, this will put pressure on them to not increase this interest rate much more. So we could be looking at a one more 0.25 interest rate, and that'd be terminal. So that takes us in line with the US and the New Zealand's. There we go. So not good news for the pound. So I want out of this pound US dollar as soon as possible. It's doing my head in. Stuck. I've been stuck in it for 6 weeks. But anyway. So yeah, so taking a tiny little 0.06 loss today so far, which is just that break even on the pound US dollar trades. We'll be getting back into those. That's what I've got on. We need to have a look at the indices because we're just about to open. So yesterday, pretty good day yesterday. I banked 3 yesterday, I think it was. $2.8, so 2,800 yesterday. So basically, I also banked on the Dow yesterday, but the DAX ORB yesterday was totally clean. Just broke straight down, easy in, out, done. You could have got a lot more on it. Some people did get a lot more on it. The S&P, nice, clean, easy trade as well. So that was a clean break up into 2R, and then I took another bit off there, and then it went a bit wobbly throughout the rest of the day. Didn't trade the NASDAQ yesterday. Ranges were too big. And the Dow, the EA didn't take this pre-market break on this account. It couldn't get the trades. I don't know what happened yesterday, but it just didn't trigger yesterday. So on the other account, on my Prime account with Robo Forex, it actually triggered the trade on the pre-market. So I got into this yesterday. I got out up here somewhere and it flew. The only reason I got out of that trade was because it was the only thing I had on, and I just wanted to make sure I banked something. In hindsight, looking at it, there was absolutely no reason for me to get out. There was a reason. So there was 3 wicks to the upside there. That's why I got out. But in realistic terms, it didn't break that low. So in theory, I shouldn't really have got out. I should have just ridden it straight up to 3R. But it was a beautiful break. So if you took the 5-minute ORB yesterday, it was just pulled back and went. And then obviously we got an A-shaped recovery and we're back to square one. So no movement really. Okay, DAX is open. Just make sure the trades are triggering. Good. So long on the DAX. Initial play today is gap fill. So looking for the gap fill initially today. So yesterday on the DAX, we had a down day. So we opened there, we closed down there. So it's a down day. Nowhere in New York. So we're looking for initially for this gap fill today. Broken long, not very volatile today, are we? News today, just quickly. Obviously CPI. That's all we got today. CPI. Nothing else to worry about on the news front. So let's have a quick look at upside and downside potential. I'm going to make you do this again today. So, where are we going up? Where are we going down, everybody? Go. UK GDP. Does that mean an increase in UK government borrowing? No, GDP is the gross domestic product. That's your output, exports, how much your country makes. Morning, Peter. Roman, yesterday was a big short fill in the evening. S&P and the Dow pushed up and dumped. I expect US inflation to raise today and further downside move for indices. See what happens later. Morning, Stevie. Nobody wants to play the which way are we going on the DAX game, and where are we going to on the DAX game today? Everyone's too scared. Or am I on a massive delay? Seriously, nobody. Oh, right, okay. I think we're going down. Yeah, no, not where are we going? Where to? Yeah. So if you're going to go long, where are you going long? Where's it going to stop when we go up? Yeah. If we're going down, where are we going to stop when we're going down? Yeah. It's all right saying up and down. Yeah. That's flip a coin. We've no idea where it's going, have we? What we do know and what we can target as traders is where it's going. So if you get into a short, where are you going to get out of your short? And if you're going long, where are you going to get out of your long? I would play the DAX game, but I've got my finger on the trigger, JC. Okay. Well, I'm long on the DAX already, so. Up to 15,769, Kennelly says. 769. Yeah, could do. So that is the previous day's low, which is ADR as well. So good confluence for the upside. Down to the 1 week low. Yeah, that's within ADR today. Perfect. And you got your 2 week low there as well, which is confluence of that zone being support level. So yeah. Going to yesterday's low, which is same level. Sorry, yesterday's low as to the upside. Yeah, could be. But if you're going to go to yesterday's low, you're probably going to go and do the gap fill, aren't you? I think it's targeting that propulsion gap at 15,800. Yeah. So it's easy, isn't it? I'm willing to short to 15,738 and take it down to local lows around 15,600, 15,738. 15,738, that's above price. Oh, short from 15,738, take it down to 15,600. Yeah. It's these lows, basically. Cool, there you go. See, easy, isn't it? You don't need me. So watching for a bounce on the short. Obviously looking for a gap fill to the upside. Upside, ADR, and unlikely we get to 175 ADR. All depends on CPI figures. I mean, if these CPI figures on the US come out massively big or small, we are going to get a lot of index movement. And obviously, the DAX will get dragged along with sector purchases in the stock market. So, Virginia, but UK GDP is down, leading to more unemployment. So more UK borrowing, possibly. Yeah, maybe. I don't know. I don't really pay any attention to what the UK does from that respect. Just about to get hedged on the DAX. So you sell stop, you can't see it. Still can't see it. Yes, you can. Just about now. Sell stop's just above my head. Not quite. Right, so there's your 5 minute opening range. So if you take in the 5 minute ORB, you will have triggered short on that. If you've taken the pre-market range today, Depending on which pre-market range you took, if you took the 15-minute pre-market, that was a tiny little range. So you'd be hedged or you'd be double-ended stop out on that. There you go, hedge now. So got a hedge to deal with. So we will see where we go. So let me see what the EA's done, because this is the new version of the EA I finished yesterday. So we should have adjusted TPs to 5R. We have. Excellent. So now I can adjust my TPs to where I think price is going to go, and then look to get into a DCA scenario on those. 2.5R really to the downside, isn't it? So I'm going to adjust my TPs down to 3R for shorts. So what I'm going to do is look for a run down, and if we get down there, I'm going to take the trades off on the short side, and then look for to get out on a bounce. Upside, I think I'm going to go with whoever's recommendation that was, and I'm going to go just shy of yesterday's high, which is 4R. Sorry, high of the low of the previous day, which is just about 4R to the upside, which is just under ADR. And see if we can get up to there and then take a bounce from there to get out of the opposite side. So that's the hedge on the DAX. Did I change that? Yeah, so it will exit me anyway at 425 ahead of the New York session if we haven't achieved one of those two scenarios. So there's the DAX today. I'm in a hedge, so we'll come back to that in a minute. All right. So no ADRs today. This morning, very unlikely we're going to get any movement this morning. The pound, we may well see some movement on. We might get some ADR hits on the pound to the downside, obviously, because we've had negative news. So there is possibilities of a pound move today, but everything else very unlikely. We're going to get anything until 1:30. So 1:30 this afternoon is when the CPI figures come out. That's when the market is going to kick in, because no one's going to want to put a load of money long or short on anything to do with the US dollar until we get those figures out and we know which way inflation is going, which will lead to which way interest rates are going, which will lead to which way you want to be trading as an institution. So that's not going to really kick in until 1:30 this afternoon. So that will affect all pairs, because obviously if you're not going to be trading the euro, the Swissy, the yen, or anything else, because you would usually be trading the cross with the US dollar on them, and you're not going to trade the US dollar because we haven't got the news. So we'll be waiting until this afternoon. So no ADRs again this morning. Dead. No weekly ranges hit. We're on Wednesday. Nothing's hit its weeklies yet. No movement. Again, it still feels like we're still in August. It's just flat as a pancake. No monthlies. Yeah, so nothing to look at from an ADR extension, a weekly extension, or a monthly extension perspective. RSI's totally flat. There are no RSI extensions either. Nothing on the 4-hour, nothing on the hourly. We are flat. Yeah, this market is just not moving at the moment. As you will see, pretty much on everything you look at, it's just sideways. So, there's not really a lot of analysis I can do on anything because nothing's moving. This is possibly going to be the worst quarter I've ever had. If it carries on like this and we don't get some movement and some volatility coming into the market, because you cannot make money very easily as a mean reversion trader trading extensions in markets when the market doesn't extend. Just the position trading strategy is fantastic, and I love it because we make money pretty much on anything that moves. It doesn't matter if it's trending, doesn't matter if it's range bound, it doesn't matter what it's doing. We can make money out of it. The only time we can't make money is when the contraction in the market is so small that it doesn't actually get any RSI extensions. Don't think I've ever sat through a period like this where I've had 8 weeks or so where we are just not trading. So I've got the VPS up just to demonstrate the point. Obviously, this is the EA, Market Reversal Alerts EA, running on all the strategies, the 4 strategies. So this is the H4 mean reversion. So this is trading H4 RSI extension M5 reversal alert entries. 2.3%. We've got 0.18 in drawdown. Yeah, that's because we haven't had any 4-hour RSI extensions. If you look at the trades here that have closed out. So this month, so far, that is all we've closed. Literally all we've closed. Pretty much all we've taken in September. In September, that is all the entries we've had. We're like nearly halfway into the month. That is all the setups. And they've virtually all played out apart from 2 of them. Yeah, so totally dead. And August was pretty similar, wasn't it? This is H1 hedging. Now, this is doing fantastic because obviously it doesn't matter what the market does with the hedging set file. It just banks money anyway. So 16% pretty much banked on that, sitting in 13% DD, which is always sitting in 10 to 20% because it's hedging. So this strategy is doing very well. Mind you, this strategy does very well every month. It did great last month. It's done great this month. It will always do well. It's just very high risk and scares the life out of me and a lot of people. So I don't trade it. But if you've got balls of steel, that's the strategy. This is the one that I'm trading at the moment. H1 RSI extensions. We're not getting any. And we're just stuck in the stuff that we've been stuck in for ages. And this is the one that's killing it this month. And last month, this did very well as well. The ADR reversal strategy. So in the last 2 months, this has banked 27%, 15% of it so far this month. So it did about 12% last month. Virtually no drawdown, 15% banked, very consistent this month. Basically because what the market is doing when it's quiet is we are getting the odd extension and then we're pulling back from it. We're getting the odd extension off of ADR, then we're pulling back. We're getting the odd extension off of ADR, we're pulling back. Yeah, ADR reversals, absolutely killing it. When we start going into some of these deeper trends, this will struggle a little bit more and the H1M5 mean reversion will take over. But yeah, this is why there's 4 different strategies, because obviously they take advantage of elastic band theory across different time frames, basically. You never know what the market's going to do. So trading all 4 obviously gives you that diversification. But tricky month this month, very tricky. So there's nothing to look at from an analysis perspective. I'm going to look at oil because we got the breakout on oil. But if there's any other pairs you want to look at, let me know and I will look at them. Let me just catch up on the chat while we're waiting also for the DAX to do something, because the DAX has just pulled back inside the range. Not going anywhere either. I'm willing to short of different price. It's a massive gap. All right. Up target 700 to 710, down target 580. Total guess. Good guess, Alan. You might be right. Morning day trader FX. Mr. Lunary, but it is showing a wick below the 2-week low. Might go down then up. I don't know what that was, but it's showing a wick below the 2-week low on the DAX. Two-week low is all the way down here on the DAX, if that's what you were talking about. Figinia, I like your focus. Yeah. You were talking about the whether or not the UK is going to do more borrowing. Yeah, I don't pay any attention to what happens with borrowing. Basically, the reason I don't pay much attention to that specific thing is all countries are always in massive debt. Whether you get yourself into more of it or you don't, doesn't really affect much because it's always happening. Yeah, it's like one of those things. You've always got a mortgage to pay. You're always going to be paying a mortgage. So whether you're going to get a bigger mortgage or a smaller mortgage, you're always got a mortgage. So there is a slight impact, obviously, on everything else when you look at borrowing. But it's not as impactive, and it's not something really that the central banks tend to focus on as a key indicator, borrowing. It has a big impact on other things, but from the core fundamental drivers, it's not really that impactive. So that's why I don't pay a lot of attention to what might happen. What I'm interested in at the moment is this, because this is driving the FX markets, or rather at the moment, as we know, it's not driving the FX markets because the markets have got no clue what's going on. They don't know whether to go long or short on stuff because we keep getting completely mixed messages about this. And this keeps changing all the time. GDP keeps changing all the time. Look at the GDP on the pound. It was going up. Now it's massively going down. Yeah, everything is flipping all over the place at the moment. There's so much uncertainty. It's just very, very, very difficult trading conditions at the minute. But when's it ever easy? Les, on hedging, when you position trade, why don't you put a 50% hedge on? Because I just don't like hedging. Just don't like it. It gets me into a mess. I've tried it. I don't like it. If you want to try it and do it, do it. I can't be bothered to manage hedges. M5, I don't care because I'm in and out of the hedge. M5 hedging is very simple. Multiple hedges over positions over weeks across multiple exposure on different pairs, incredibly complex to manage, and I really just don't have the brain power to do it. The reason I position trade is to keep my life simple. I'm trying to simplify everything, not make it more complex. Henna's, my price action toolkit is drawing the ORB lines but not taking the trades. Are there any common reasons? Yep. You haven't got auto trading turned on. I haven't got a price action toolkit available to show you, but you haven't got auto trading turned on. That's usually it. In the EA, that is. Auto trading might be turned on in your terminal, but not turned on in the EA in the settings. Other than that, there's no reason why it shouldn't trade. Morning, AZ. CAD Yen is influenced by oil. Yep. So the Canadian dollar's main export is oil. So when you're looking at the Canadian dollar, so you saw we had a massive rally on the Canadian dollar yesterday. If you look at something like the Euro CAD, yeah, we had a big drop. Yeah, so we had a big rally in the Canadian dollar, pound CAD down, US dollar CAD down, everything CAD down. What happened yesterday to oil? Big rally on oil. Yeah, so it's all interlinked. So basically with oil, we've been looking at this breakout for the entire year now. So this level, where are we? There. Which we tapped into. So it came down and we found support at that level, which was the roughly 83 to 84 a barrel. And then we broke down, came back up and retested that level. And then we came up, we couldn't break higher. We put a low in, we came and retested that level. We came back and we started making a smaller range. And then we slammed back up into that level and pulled back. That's the point I said, lovely long, because it's just 38 retracement. And it looked like we were going to go for that $95 a barrel target. We broke out the high. I've been waiting for a pullback on it. And unfortunately, the Saudis yesterday said they were going to extend their reduction in production. So basically, supply and demand driven product. So oil prices going up. So it didn't get the pullback into the 24, which is what I was looking for a long. So it's just broken out to the upside. I remember I said yesterday, I think it was yesterday morning's live room. I said, you know, what I would like to see today is a pullback down into here ahead of oil inventories this afternoon at 3:30. But we may just get a breakout. And if the breakout goes, it's probably just going to run. That's happened. So I don't know whether it's going to continue or not. Oil inventories, I don't think oil inventories this afternoon. Oil inventories every Wednesday at 3:30. I don't think the oil inventories this afternoon are going to make a lot of difference to this. The demand is still there. The supply is constricted. The price has to go up. So it's a case of trying to get into this, which is why I'm not in it, because I'm finding it very hard. I can't take breakouts long term. I get in when the market's pulling back. So I'm struggling to find an entry on it for a long. That was the entry. So yeah, I don't know. But yeah, longs on oil, and therefore a little bit of Canadian dollar strength expected over the coming days. So US dollar CAD, I've got shorts on at the moment. I was toying very, very closely with the idea of taking this off last night, this one, just to bank that $500 odd I had sitting there, which I still have sitting there. But with oil potentially rallying at 3:30 this afternoon and the US dollar potentially having a negative CPI this afternoon, there's a good chance that this could really be down at these weekly lows today. So I'm crossing my fingers for negative CPI on the US this afternoon. And if we get that, we'll be down there. What I will probably do on this position that I have on here, because it's in profit, if we are still sitting here before the news, which I suspect we will be, what I will do is put a trailing stop on that one in case we spike. So if we do spike and we do get a positive figure off of the US dollar, we're going to get a rally in the US dollar. So if that happens, I'm just going to bank that and then I can put that trade back on again. However, if it starts to drop, I'm going to trail that position down. So my trailing stop, looking at whatever the range is at the moment. So at the moment, the high is there. Yeah, so we've got this high at the moment. So what I would do is, let's say, for example, price is somewhere around here. I will just measure that distance. It's 220 pips, which is just under half an ADR. Half an ADR is 35. So I'll put a trailing stop on at that level and assume that we get the negative news. We are going to drop, and I'll just get that trailer taken with me, and I'll get out of that trade whenever I want, whenever it basically pulls back, just so I can lock some profit in on it. It's at break even at the moment, but you know, these are the things that as a trader you have to decide. The EA is going to get me out of this position when I get to 1.5 ADR in profit on the entire position. As a trader, I know there's news coming, and I am expecting a little bit of US dollar weakness. So therefore, I'm going to treat this differently. Yeah. So, you know, you just got to be a little bit careful around news, and makes sense to lock in that profit. So that's what I'll be doing with the US dollar CAD. I'm short exposed on the US dollar. Pound US dollar obviously will fly if we get negative news. Euro US dollar will fly. Aussie US dollar will fly. I'm long on those. So lap of the gods, really, aren't we? Waiting. See what happens. Mr. Lunacy, my 2-week low is at 156.70, while 3-week low. What are you talking about? The DAX? 156.70. Yeah, you're probably trading a different market. I'm trading cash. You'll probably have different price. The price action will be the same, but your levels might be different. Trade your charts. Yeah, not my charts. Always trade your charts. Your charts will quite often be different. DAX is going for the gap fill. So we'll see what reaction we get around that gap fill. John, morning. Off topic, what broker do you use? Forex. There's a link on my website. I'll put the link in the chat. Click that link, everybody. I get paid absolutely $5 or something. Paid promotion included. GU bouncing off the week's low. Yeah, so GU's holding nicely at the minute. At the moment. So this low, which is the weekly low, we've already had one bounce at that level, and then we put in a new high. I was expecting a lower high push. Obviously, the news has stopped that happening, but the limit orders are triggering at this low. So that GDP number, although it's negative, we have got to wait for Bailey to confirm what they're going to do with interest rates. So it's possible that we will just get that kind of movement. Don't forget, obviously, the market is also not going to want to put all its eggs in one basket ahead of CPI because we've got the US dollar. So I suspect these limits are being allowed to trigger because there's not enough sellers in the market because they're waiting to see what happens with the US dollar this afternoon. This afternoon, I think this thing's going to go one way or the other. If we get positive US dollar CPI figures, this thing could be down at 200 ADR today because the market will want to sell off that pound and it will want to buy that US dollar. So that'll come down pretty damn hard this afternoon. Wait and see what that CPI figure is. Just approaching gap fill. So watch this level and watch, obviously, 2R, which is the gap fill itself. Gold? What do you want to see gold for? Let me ask you this a question, Anonymous. Good play on words. With gold, what do you want to do with gold? And when do you want to do it? It's not a trick question. Just asking when you want to trade it and on what time frame. Answer me that, and then I'll do an analysis on it for you. Have you heard any news on my Forex funds? No. Thanks for subscribing. Immunity, welcome aboard. Welcome to the stream. So my Forex funds, basically, obviously, the CFTC's taking them to court, etc., etc. The court case has been put through. They are now on an extended ban until October or something. So I would say forget them. They've gone. He ain't going to dig himself out of this one. And I think it's going to cause a lot of regulatory pressure on the prop industry. So I'm going to steer clear of prop for a couple of weeks, a couple of months. I've put some more capital into trade indices on my own rather than using prop funds, basically, for the minute. I think you're going to find a lot of these are going to fall by the wayside quite quickly. Or there's going to be a scramble for regulation, and regulation costs a lot of money. If you want to become a properly regulated firm stroke broker, costs you $250,000 to go through regulation. So all these firms out there, they've got a decision to make. If they're big firms, they'll probably go whatever, cost of doing business. If they're small firms, they can't afford it. They'll just go. They'll be disappeared. But yeah, not looking good, is it? Pound US dollar, good day. Pot goiter. John, free coffee. I don't know what that means. When do we graduate from this trading school and become successful? Well, have you not graduated yet? Virginia, come on. Are you either a break-even or slightly profitable trader, Virginia? And what were you before you came here? A losing trader, obviously, because you came here. If you were a winning trader, you wouldn't be here. So are you break-even or in profit now? If the answer to that question is yes, there's your graduation certificate. Euro odd. But you never stop learning and you never stop getting experience. You just get better and better and better the more you do. This is one of the few jobs out there that you become better at the longer you spend doing it. And there's no end. There's no end. I'm constantly still going, wow, and finding new stuff. There's 1,000 billion, quadrillion ways to trade these things that we see in front of us. And there's tens of thousands of instruments out there that you can trade as well. You will constantly be evolving. It's never ending. You can't explain it until you've done it. I've been doing this for 15 years. I've ended up back to where I started because where I started was basically the same. Completely random, no idea where it's going. Flip a coin, except I spent a long time looking for a way to make this thing do what I wanted it to do. The only realization you need is I can't make this do what I want it to do. So either I'm going to use a stop loss and a risk reward and just accept it, or I'm going to trade in a different way and eliminate my losses. But I'm always finding new ways to trade around these markets. There's no never end. It will never end. You'll go off on tangents. I position trade, and I've been position trading for many years. I started trading the opening range breakout strategy over a decade ago. I only came back to it last year, and now I'm flying in the opening range breakout strategy. I'm making fantastic money doing that. You know, I'm looking into a hedging strategy now. I hate hedging, but I've found a really easy way to make money hedging. Yeah, I'm evolving. You're constantly evolving. I might drop position trading completely and become an index-only hedger. It doesn't matter. As long as you can pay the bills, you just do what you do. Euro odd entering a big range, Mac. This person from gold isn't coming back to me, are they? Where are you? You haven't told me why you want an analysis on gold. You know what I'm going to say if you've been in here before? Someone else will probably say it in a minute. Euro odd. Yeah, big range. You're bang in the middle at the moment. So if you're going to trade a range, you trade from extremes. You never trade from the middle, because the middle gives you a 50-50 shot up or down. This edge gives you that. This edge gives you that. So where you are now, not worth bothering with. UJ, not going anywhere. It's trying to get to the gap fill. When we get to the gap fill, question mark. How's it going to get to the gap fill? This afternoon with CPI. Or it's not going to make the gap fill and it's just going to come down. Don't know. Daniel, I was referring to your $5 referral code. Oh yes, for the coffee, free coffee. Yes, exactly. I said in here the other day, I'm an affiliate. There's half of these links on my website are affiliate, and some of them aren't affiliate. So Tick Data Suite isn't an affiliate. Jigsaw's not an affiliate. It does. I mean, it does. It is. It clocks an affiliate. It is an affiliate actually, but I don't really get paid on it. But the amount of money I earn out of these sort of stuff, like these, you know, go and join Robo Forex, I get a little kickback of virtually nothing. It's just not. It doesn't make any money. Not right. DAX gap fill's done. Okay. Big rejection at the gap fill. Do I take it off on the gap fill? Are we going for a down day? That's a tricky one today. That's a big rejection. I'm not going to take that yet. A lot of sellers just suddenly stepped in on the market there. Just check the news. Von der Leyen is speaking, launching a strategic dialogue on agriculture. Labour shortage is a most significant bottleneck. EU needs qualified migration to fill labour shortage gaps. Okay, so we might be getting a reaction to what von der Leyen is saying at the moment. So this is possibly just news spike. AZ, since retail Forex traders trade CFDs, the broker wins when we lose. Why all the talk of institutions running out stops? We don't have stops on the same instrument. Yeah, exactly. AZ, go and ask the man that runs that YouTube channel that comes up with the stop run strategies why he does that. I don't know. A stop run is basically a support and resistance bounce. I use the terminology as everybody else does. You know, stop runs are a thing, yeah, but we call them stop runs. We generalize them as stop runs. What the market is doing is hunting liquidity, basically. For an institution to fill orders, it needs to have the opposite end of the trades taken. So if I'm a bank and I've got a ton of US dollar orders to fill, I need to go and find people that want to do the opposite of what I want to do. If I want to buy the US dollar, I've got to find people that want to sell the US dollar. Buyers and sellers activate limit orders at highs and lows. So if I want to buy a load of US dollar, I need to drive the price up to where the people are willing to sell it, which is here. What happens is it pops out the top and then comes back down again because I've completed my orders and now I'm not executing them anymore. So what happens? The sellers take control because there's less buyers because I've done my job. People call that a stop run. They're not running your stops. They're finding liquidity to execute the orders and then they're stopping. So what happens when you run in one direction and you stop running? You have to walk back. It's not, people make up all sorts of terminology to sell you stuff. At the end of the day, it's support and resistance. Why is the pound US dollar now bouncing? Yeah? Why is this happening? Because we've bought, the institutions bought the pound US dollar there. It's proven by the fact that they came there and they bought it again. There were more buyers than sellers in the market because we made a new high. We managed to get more movement to the upside with buyers than sellers. Sellers then drove it back, were unable to get back to that point because the buyers in that propulsion gap added to their positions. We've just had a negative news event, which should drive the pound really, really short. What have we done? We've driven the pound really short into what? A load of limit orders from the buyers who want to buy the pound. This is not a stop run. Yeah? People like ICT might try and convince, or Steve Maurer might try and convince you that's a stop run. What it is bank and institutional limit orders triggering at that level because they've been told to buy it at the level by corporations and institutions, pensions, hedge funds, and anybody else they execute commercial orders for. The fact that it goes past that level means that they're sucking up all the orders at every level they can possibly find to fill those orders. Liquidity. You put a terminology on it, you can sell someone a £2,000 course. That's all it is. Market moves up and down from supply and demand, support and resistance, liquidity pools, stop runs, whatever you want to call it, goes up and down. There's no way of telling if that is going to now stop there and collapse or whether it is going to run. So what you will be taught is if you take that after that's happened, you've got a chance of it pushing up. You have 50% chance of it pushing up, or you've got a 50% chance of it pushing down. It's just a reason to take an order, isn't it? Reason to get in the market. That's all we need. Are the kids into trading? No. I did teach my son to trade last summer, having no experience whatsoever. I just taught him basically how to take trades at support and resistance with the reversal indicator, and he did. Because he did what he was told. Funny enough, he made money. Break even. Virginia, yeah, break even, before then a losing trader. Glad I found you. Yeah, there you go. So you are graduated, Virginia, because you are now profitable. Or break even. Break even is not a losing trader. You are either a losing trader or not a losing trader. Yeah. Becoming a not losing trader is 99% of the battle. You are better than 95% of traders out there if you are break even. DAX to the moon. Yeah, hopefully. UJ, I've already done that. My broker does not show gaps as I'm seeing on your charts. That's because they're showing you pre-market data. I haven't got one open that's got pre-market on there, but they will be showing you potential movement before the exchange open. So nothing you can do about that, apart from change brokers if you want to see the gaps. If they're running stops, they must be running other institutions' stops. Institutions don't use stops. Retail aren't trading spot or futures on Forex. No, you got get your head around, get your head, AZ, out of the fact that you are not seeing the futures market. Forget that, right? This is price action. The price is irrelevant. Forget the price. It's got nothing to do with anything at all. Yeah, forget it. Pretend that doesn't exist. Go and look at a futures chart of the DAX and look at this CFD chart. They are identical. The price is irrelevant. What it trades at is irrelevant. The price action you are seeing on CFDs is the same price action you are seeing in the futures market. Yeah. This is just a contract for difference with your broker instead of a contract with the CFTC. Not in the DAX's case, because the DAX isn't traded through the CFTC, but for US indices, for example. Yeah. Price action is price action. Price action is the same across however many brokers you look at. They are all doing the same price action within reason. Yeah, you might have slightly different candles, slightly different highs, slightly different movement, but that is caused by spread. Yeah. Try and forget about everything. Trade your charts. What is this? Currently, it's a gap fill bounce. I don't even know what the price is. I'm not interested. Where's it going? It's going to levels it's been to before. It's going to fill propulsion gaps. It's going to highs and lows of sessions and days and highs and lows of sessions of weeks. That's it. Get everything else. Watch price action. That's a rejection at a gap fill because there's unfinished business from yesterday which needs to be complete. That's done now. Price is now free to go wherever it wants to, however it wants to go there. My point is we trade CFDs. Institutions trade spot futures. Who's running the stops? There isn't any stops. That's what I'm saying to you. I've just been saying stops. Forget them. They don't exist. Institutions don't use them. ICT made up a stop run. He made up the word stop run. Or Steve Maurer. Someone did. One of these guys went, it's Steve Maurer, wasn't it? Don't trade until they've hit the stops. Shut up, Steve. They don't use stops. I know bankers. They don't use stops. I don't use stops. If you use stops, you get stopped out. Why would you possibly put a stop in the market? Yeah? Just lunacy. You put stops in the market as institutional traders because the training courses tell you to put stops above highs and lows. Yeah? You get stopped out because banks and institutions drive price to liquidity pools where institutions have orders, right? An institutional order here, right? Let's put a little trading sell limit, right? Institutions place sell limit orders at highs, buy stop orders at lows. Yeah. They are not stop losses. They are orders. They may be to exit a position. They may be to enter a position. They are just orders. They are not stop losses. Think about it. If you're in a bank and you've just gone long 1,000 lots, or rather contracts, as you would be in futures, on the pound, would you put an order underneath where you entered to lose you $25 million? No. Your boss would shoot you. You'd be fired immediately. They do not operate like that. They operate in exactly the same way as I teach. They position trade. They DCA. Go and listen to Bloomberg. You will hear the hedge funds, the institutional traders talking about DCAs, dollar cost averaging into positions. They do not use a stop loss. It's nuts. Think about it. If you had a trader on a prop desk or a commercial desk in a bank, you gave him 25 million, said, go out and give us a return. And he had a losing run of 20 trades and he lost 50% of that. Doesn't happen. It's not how the institutions work. Institutions place orders because Microsoft told Barclays, I need to get a conversion of the pound US dollar done at X rate roughly to make us profit on all the software we've just sold from the US into the UK. And I need you to execute 25 million pounds into US dollars for me, or billion, whatever it is. The bank's job is to place orders and execute them. If it cannot find anybody the opposite side to take them, it will move the market to where it can. Market maker desks in banks exist to drive the market to levels they need to execute liquidity. How the market works. There's no such thing as, oh, we go up there because there's a load of stop losses up there from retail traders. Shut up. It's rubbish. Think about it. It's a $15 trillion a day market. Do you think they even know we exist? They don't care about us. I couldn't put enough money into this market to move a candlestick 1 pip. I'm not significant in any shape or form. I get asked as well, every now and again, somebody asks, and I've asked this question, so I don't mind answering it, but I've asked this question before. You're selling EAs. If the banks found out about how your EA works, do you not think the whole strategy would fall apart? Like, if 1,000 people use the market reversal alerts EA on their accounts, they still wouldn't move the market a tick if all of those EAs executed a trade at exactly the same time. We haven't got enough volume. We are the poo that comes out of an ant on the bottom of the bank's shoe. That's how small we are. Stop runs are just not a thing. I'm going to hold up my placard now and say, prove me wrong. Anyway, there you go. There's my rant. If they were running, so I just answered that one. US retail traders are insignificant in the market. They're not really hunting stops or limit orders now. It's just market movement. You know, this is the thing. This is why I say in the position trading bootcamp, forget everything you've learned. Everything you've learned is taught to you to try and sell you something, right? There are free courses out there. Mine's a free course, right? But there are free courses out there, very few and far between. Most of them are provided by brokers. Why? Because brokers need you to trade, because every time you press the button, they make a commission, a spread, and a swap. So they give you courses to say, this is a strategy that's successful. Go and trade it on this $1,000. Oh, didn't it work? Okay, let's look at another strategy. As long as you keep pressing these buttons, we make money. What do all of the strategies you've ever been taught to do tell you to do? Get into the market and place a protective stop on your account that we can go and grab. They don't grab it. It just price moves up and down because institutions are executing orders. There's 10 major banks and institutions that drive the FX markets up and down, right? They all disagree with each other. None of them are ever in sync. Therefore, price action goes up and down all the time because as one of them makes a move, they get to where they want to be to execute their orders. And then their commercial desks have finished the trade. Their speculative desks exit the positions and take profit. Market structure, elastic band theory. It's all related to bank movement. Banks don't have stop losses. Just the way it works. But no one's ever going to teach you that stuff, are they? Because that stuff doesn't make anybody money. When you understand that's how the market works and why it works, you realize that every time you put a stop loss in the market, you're going to get stopped out because the market goes up and down naturally. How can you predict something that's completely random, driven by 10 institutions that execute random orders in the market based on businesses that tell them to execute random orders? How can you possibly find logic in that? You can't. So stop using a stop loss and just wait for the banks to do what they do and get out when you get out. You know, stop runs, there's just, you know, well, you know my feelings on it because I talk about it all the time. But anywho, John, do you think FTMO will be okay because it's registered in Europe? No. And it's been going for the longest. My Forex funds were based in Canada and they did not obtain IIROC membership. None of these prop firms, there's two distinct issues here. The prop firms being unregulated. None of them are because there is no regulation. The second is the brokerages that prop firms use to execute your so-called orders or provide your accounts and your data have to be regulated. Yeah. My Forex funds, the guy that owns it, set up his own brokerage. So he had ownership of the brokerage, ownership of the prop firm, and had 100% control over every single thing that happened in the company. So as a trader, you get past the evaluation by paying him $500. You get past the second phase, you get a funded account. He then goes, I don't like this guy. I'm going to spread it, stop him out, and make his account get blown. because he has control of the brokerage and price. So basically, it's the same as binary options. It's a con. That's what the CFTC are investigating. Whether that, there's so many things going on with my Forex funds. But if a prop firm has its own brokerage, it's not safe. It might be safe from Canada, it might be safe from the US, but it's not safe from its regulatory body. Any prop firm in the UK with its own brokerage is going to be investigated by our UK regulators. The Australian ones will be regulated by the Australian regulators. The ones in Singapore will be regulated by the Singaporean regulators. Doesn't matter where you're placed in the world, you have a regulatory body that manages the finance industry. They will be after you. So what the prop firms need to do is go, what boxes do we need to tick to be in business? And get them ticked as fast as they possibly can. What they are, I don't know. It's up to them, isn't it? They need to decide that themselves and figure it out. Until then, I'm just staying clear of it because I don't see the point in placing any more money. My Forex funds already owe me money. I don't want to stick it in another one. And I've done one evaluation since, which I got through phase 1, failed phase 2. That was with Alpha. And they have their own brokerage. So I decided, screw it, I'm just not going to touch them anymore until this is all sorted. I have no idea if FTMO are safe because I have no idea what regulation they need and if they have that regulation. So that's a question for FTMO to answer. And I'm pretty sure they will have answered it. If you look on, go and have a look at their YouTube channel. I would imagine they've probably answered this question. And if they haven't, they should. Nah, they've not released a video on it. So I don't know. Ask their support. Go to their Discord. Ask their Discord. The question that needs to be asked is, what regulation do you need? Have you got it? Goldman Sachs cuts the UK's GDP growth forecast to 0.3 from 0.5. Starting to drop into recession. Oh my God, China are about to ban iPhones. Watch out, NASDAQ. That could massively impact Apple, which will massively impact the NASDAQ. Keep your eye on that. They suddenly start banning iPhones, there's going to be a huge drop in the NASDAQ stocks because half of those people in the NASDAQ supply Apple. So when Apple's in trouble, the NASDAQ's in trouble. AZ, it's just hilarious how NNFX talks about banks are after your stops. Yeah. But I mean, No Nonsense FX. I mean, I like No Nonsense FX because he has a logical approach to system and strategy development. His stuff is actually really good. But he doesn't trade, does he? Nobody knows anything about him. He doesn't run a live YouTube channel. He doesn't, doesn't trade live. He doesn't do anything with it like this. He's got a load of videos which he talks about how to put a system strategy together, which is all logical. But every single one of them uses a stop loss. And there's no problem using a stop loss. Don't get me wrong. Stop losses are fine. If you are trading small time frames or intermediate time frames with a positive risk reward strategy that you are fully aware is 100% random. As long as the understanding is there on how to make money with a stop loss, that's no problem. The problem is everybody goes into system hopping mode. This video on my website is all about system hopping. And the reason it's there is because it's what everybody does. And the reason we system hop, wherever it is there, is because we try to find a strategy that can constantly make money. There isn't one because the market is random. You cannot find order in randomness. The reason the opening range breakout strategy works so well is because it's not random. We know at 8 a.m. every single day, there is a strong market movement. ADR and ATR picks up dramatically. That's not random. That is a timed event. The New York 230 open in the UK, timed event. So that works. Everything else in trading is completely random because there is no time anything happens. It's down to the banks and when they execute orders. That we can't control. That we cannot find any logic in. We know that they move from level to level, and that is as much as you can do. Every indicator you put on your chart is measuring price movement. Price has already moved. Every single indicator lags this thing at the hard right edge. None of it can possibly make you a profitable trader. Lines on the chart, however, where price has bounced from over and over again, tells you where the banks are. The banks executed a large order here. How do I know that? Because price moved down. And when they came back to it, they added more positions twice. I know the banks are trading short from that area. I can see it on the chart. No indicator, a line. Only thing you can use. And what happens is, because everybody expects it to do that, and occasionally it does that, that becomes a stop run. Sorry, I'm on a rant this morning, aren't I? But hey, good to know. Trust me, guys, Leah's right about stop losses. It'll get you nowhere. Yeah. On CFDs, orders are placed on based on liquidity. CFDs don't move the market. It's a bet between sides. Yeah, exactly. Contract for difference. Think about right. So a contract for difference. Your broker receives a price. He offers you a contract for the difference in price between what he's got and what he's offering. It's called a spread. All a CFD is. In its simplest form, a CFD is a spread. Contract for the difference in price. I.e., a guaranteed income, 100% guaranteed for your broker every time you press one of these. Every time you press one of those, guaranteed income for your broker. Why do you think they give you loads of courses that stop you out the market? If you got into a position in the market and went long and it went down and you didn't stop out, what are you not going to do now? Press the button again. What does he make money on? You pressing the button. Why do they teach you to put stops in there? Because every time you get stopped out, you press the button again. Makes them money. That's how the industry works. Brokers are there to execute orders on a commission. If you do not execute orders, you do not earn a commission. How it works. So everyone's laughing now. Your ant's poo on the bottom of a banker's shoe. That's true, we are. If I trade a 30 grand account, right, and I put 100% of that 30 grand on in one order, that won't move. It's just not going to move. I can't move this. No one can. If we all did it at the same time, it's not going to move. We're that insignificant, really. You're an amoeba on the poo of the ant's poo on the bottom of the shoe of the broker, who is standing on the shoulders of two other brokers. That insignificant. How about the prop firms based in the UAE? Are they safe from the US and European regulator? I've answered that, haven't I? They're not safe from their own regulators. This is the first one, guys. Yeah, with my Forex funds, they are being investigated first. It's the same as any industry. When one gets investigated, the regulators go, really? What do we do about that? Bang. All of a sudden, they start investigating, and it just rolls. It snowballs. You're going to have class action lawsuits and all sorts of stuff against these prop firms, I think, unless they get their act together fast. I don't know. It could blow over. It could turn into an absolute explosion. Should have taken it. Should have TP'd and shorted. Didn't do it. The wrong call today. So I'm going to play the short bounce down there instead. Hopefully get out down there. Speaking of regulation, I use RoboForex. Recommend. I'm well happy with them so far. Bit wondering about regulatory in Belize. With regulation with brokers, right? So in your own country, you have your own regulatory body, and they will usually have what's called negative balance protection. which means that if your broker was to go bust, or there was a catastrophic move in the market, a black swan event where it took your balance negative, that is covered. So there's two things that regulators do with brokers. They guarantee your money is segregated out of the broker's funds. So there is a separate pool of cash used for trading. Yeah, that doesn't get touched by anything to do with standard business operation. The second thing is obviously negative balance protection. So if you go into negative balance, you don't have to pay the broker back. You've also got positive balance protection. If the broker goes bust, you can go to the regulatory body and say, they have all my money, and the regulatory body will work it out with the litigators to get your money back. That's what happens in your country with you. Every country protects their own citizens in that way, or a variation of that way. When you're trading in a country with another country's regulator, you will find that there will be certain things that do not cover you. One of them is normally negative balance protection. So it means that if there was a black swan event and your balance went negative, that broker could come after you for those funds if they can A, be bothered, B, it's enough money to warrant it being profitable to do so, and C, they haven't gone bust. What you find with most black swan events that cause negative balance protection not to trigger, the broker goes bust. Therefore, you never get chased anyway. So that's what the regulatory bodies do in regards to brokerages. So trading overseas, if it's a big company, you're safe. If it's a small company overseas broker, yeah, you could place your money with them and they could just pack up shop and run, and you can't do anything about it. So if you're worried about that, use a big broker. If you're still worried about it, don't trade. If you want to access these markets, you have to go with a broker. You haven't got a choice. You've got to pick one. I've been doing this for 15 years. I've never had an issue. The only issue I've ever had is when Alpari went bust on the Swiss franc peg removal, and I had to go through litigation for 3 months to get my money back. But, you know, there's nothing you can do about it. Part of the job. All jobs have got risks, and that's one of them. All prop firms can't use Deal for payment anymore. No, that's correct. So Deal have kicked all the prop firms into touch. Crest, I think it was the other day, someone said they are only paying you in cryptocurrency now. Not attractive to me in any shape or form. So I won't be using Crest, but that's all changing. So yeah, need to be aware of that. Do you invest at all into the stock market? No. No. No nonsense is a prop trader. His firm, Maverick Trading, he was a waiter in Vegas. I haven't followed his stuff for ages, so I don't really know what he's doing now. But well, is he still a prop trader? We shall see. Nobody will be a prop trader soon, by the sounds of things. None shall pass using a stop loss. Exactly. So what's spread betting? So spread betting is, in a sense, the same. Spread betting only exists in the UK. As far as I know. But basically, spread betting is virtually the same as a CFD. The difference being, on a spread betting account with someone like IG is one of the biggest spread betting companies, you get a wider spread. Yeah. They do not charge a commission, and it's classed as gambling. So in the UK, spread betting is legally classed as gambling in the same way as betting on the horses is, betting on football, tennis, playing roulette, blackjack, whatever. Yeah, it's gambling. Okay. So what the spread betting companies do is they have a wider spread, and they are saying to you in their contract, you are gambling on this thing going up or down. The major difference is, in the UK, gambling, there is no tax on your earnings. So if you were to earn £50,000 a month spread betting, you have earned 50,000 in gambling revenue. You don't pay tax on it. However, the caveat is, if your gambling income is higher than your work income that you receive under PAYE, this becomes your main income and is taxable. So the only people you'll find using spread betting are people that don't make money as traders, because if they did make money as traders, they still have to pay tax on it anyway. So you might as well trade a CFD, which gives you tighter spreads. Which is why you'll find there's only people like IG that do it, basically. So ways to trade: spread betting, CFD trading. Yeah, so there's your spread betting. Take advantage of risking rising and falling markets tax-free by spread betting. Yeah. Don't bother. IG spread and execution is bad. 70% of people lose money when trading spread betting or CFDs with this provider. I don't know where they get these numbers from. It's definitely higher than that, but anyway. We got some RSIs. So that bounce is working very nicely on the pound US. We got an RSI on the euro pound. Oh, it's played out. You've missed it. Should have been paying attention, shouldn't we? We're waffling today. So 5-minute reverse alert was there. There's your retest. There's your M pattern. There's your stop run. Is it a stop run? No, it's not a stop run. Yeah, it is. Yeah, it's just a stop run of that. Look. Basically, when you get an overshoot of a level, what it means is there was not enough liquidity executed there to fulfill the need of the person that wants the liquidity execution. So they push beyond that level to find more orders. And then when they've completed, they stop placing all the buys, and just through pure no more buyers in the market, sellers take control of the market because there's more of them. Yeah. Think of it like a wave coming towards you. That wave dissipates, comes back, and then another wave comes. Yeah. That's what the market structure is. Waves. Waves of buyers and sellers. So the further you go past it, you know, the more orders there are, and which is, you know, market structure. When you get funded, how do you know that you have a real account? You don't. You don't get funded with a real account. Go and look at the terms and conditions in your contract with your prop firm. If you're going to use a prop firm, they have the option to copy your trades onto their into their portfolio, if you like. It never happens. Not that I'm aware of, anyway. A lot of them say they do, but they don't. If that was the case, you'd have different execution. If you the difference between my Prime account over here and my ECN account over here, execution wise, the Prime account is like that because they're executing the. I'm on the at the moment on the A book for them. They're executing my trades on the opposite side. My ECN account is going out to dark pools and getting filled a lot slower. My Forex funds evaluation accounts and funded accounts, there is no difference in execution. You would see a difference in execution if that was a real account, because they would have to go out and find liquidity to fill those orders. Happening. But, you know, some of them might do. FTMOs say they fund people. I mean, at the end of the day, there's no way of knowing, is there? You're never really going to find out. But, you know, the business model of prop is sell people a demo account. We know that 70+% of people can't trade. Therefore, 70% of that money that you make, let's say we make 10 million a month in selling demo accounts, 7 million of that guaranteed pretty much in our pocket. All we got to do is make sure that these guys that are actually past the prop firm evaluation, they don't make more than 7 million. Whatever's left in the middle is profit. In my Forex funds case, over 300 million of it in a year. Do the maths. Selling demo accounts, good business. Maverick, legit, they pass through all your trades based in the US. I don't know. Prove it is all I would say, Big Les. Show me proof that it's all executed. I'm happy to be proved wrong. You know, I'd love. There are prop firms out there that do work. I've worked for a prop firm that is real trading. Yeah, you know, you're trading their liquidity, but you have to pay that prop firm. They don't do an evaluation. You have to pay them an amount of money to have a desk in the firm. Yeah, it's a job. So this is more of. I'm sure there are some out there, but you'll find that people that are offering you real liquidity of their own money, they won't be doing an evaluation. They won't be charging you for an evaluation. Yeah, why would they do that? If you think you can trade for us and make us money, we want you. So just show us. I'm not going to charge you money for showing me that you can become. It's like walking into a job and saying, "Hi, if I pay you 1,000, will you give me the job?" Or rocking up with your CV going, "I've got 15 years experience in this. Here's my P&L. What do you think?" "Yeah, looks good, mate." They're going to give you the job anyway. They're going to give you their capital because you're good. You don't need to prove it. How long have I been with Robo? A couple of years now. Question on leverage. You said before you only put a smaller percentage of your balance in your account, but your EA, you tell it you got the full amount. So 0.25% on half an ADR is based on the full amount or reduced. So you would adjust that. So at the moment, I've got all account money in my account, but you can basically just adjust it. So if you've got a 30K account, let's make it easy. If you've got a 50K account and you only want to deposit 25K in the account, you would be trading 0.25. Yeah. So you have to up that by whatever you've reduced the balance by, which is 50%. So that would need to go up to 0.37. Yeah. And that will give you a simulated 50K account on 25K's worth of money. Yeah. Or double it. Yeah. So, I mean, it depends on the maths, obviously, on to how you want to manage it. But at the end of the day, you've just got to test in the strategy tester to make sure it's taking the right amount of money. So the lots are a difficult thing to measure. So what I would do is stick it in the strategy tester, take the trade with whatever the lot size is based on what you want, wait for it to play out with 3 positions and watch what the drawdown was and watch what the financial return is. The financial return should be 0.25% to 0.5% of what your actual balance is you have in your bank account. This is something you really only need to worry about if you're trading with large amounts of money that you don't want to put in a prop. Because if you're trading with a $5,000 account, stick the whole lot in there. 5,000 is nothing. It's just not, doesn't come into it. It's when you start trading 30, 50s and plus, that's when you want to lodge a smaller amount and then top it up if you need to. But you would basically need to adjust your lot sizing based on whatever money you've put in there. 7K for Maverick. You work for them. I have not even looked at them. Oh, yes, I have. Yeah, these guys have been around for ages. A long time. Yeah, 1997. Last changed in May. So yeah, these are what I would class as a proper proprietary trading firm. Yeah. So you let's see how they work. I think you have to trade their strategy, if I remember rightly. They train you as well, don't they? Yeah, there you go. Look, this is a proper prop firm. Prove it with real money. We will up yours if you are good at it. And then we'll give you some proper capital after a year or so. Yeah, this is how it really works in real prop, not just selling demos. What's the money? How much do they charge you? 7K, is it? Application. Oh, no, I don't want to get started. I want an application process. Oh, go away. All right, yeah. Yeah, so but you got to apply for it anyway. But that's kind of a proper one. These are like the ones in London. You know, like I said, the prop firms in London. You bought a desk. You went and bought a desk. Not your own desk, obviously. They had desks. You bought a chair. No, you didn't even buy a chair. You bought the ability to sit on the chair. Darwin X have a very great model. Darwin X isn't a prop firm, though. It's a broker. Darwin X is an investment broker. So they basically will invest in your strategy. But it's going to take you 6 to 12 months to actually get evaluated for a Darwin. And then you're not even guaranteed to get funding. I've had Darwins for years, but never been funded. Too many things that go into Darwins. We were talking about this one the other day. To actually get to be classed as a Darwin, you need to satisfy all these criteria. And one of them is this, which is experience. And you will not get that green experience and not get any revenue from Darwin X, until you've got that green. And then you're not guaranteed to get massive funding, and out of that funding, you're not going to earn an awful lot of money either. So this is kind of a secondary income, if you like. And it's also a way for copy trading. A lot of people, obviously copy trading, I could send out signals and you could copy my trades. This is how I would do it. I would set up my own Darwin, and you can go and invest your money into Darwin. So you would set up an account with Darwin X, and basically you would pop that in there, and you would copy my trades from my Darwin X account into your Darwin X account, and it's a copy trading system. You would become what they call an investor. Yeah. So, but you can't withdraw that capital because I'm trading with your capital. So if it's a different bit, completely, it's nothing to do with prop. It's a totally different business model. But I've traded with Darwin X for many years. And there's some really good ones in there. But you look at the proper return on investment in Darwin X. Yeah, this is a proper trading account. Yeah, this is a proper return. 20%, 14%, 8%, 22%. This is an incredibly successful Darwin. Look at its monthly returns. Yeah, they're not interested in traders who are going and making 15% a month with high risk strategies. Not for them. This is why I'm not invested in, because my Darwin's never ever going to return this. It's going to return way more than that because I'm a high risk trader. Yeah, they're interested in investments. So if you've got a strategy that is solid at returning small returns, like my H4 M5 strategy this month has only done 2.3% so far this month. That's verging on too aggressive for them. Totally different thing, but very, very good. But you'll find it very difficult to get funding with the sort of money. Imagine, look at my my performance on the hedging this I mean, the last, what have we done this month? 17 grand. So I've made a 17% return this month already. Hedging on, and we're only on the 13th of the month. I'm on target for a 20 to 30% month. They're not interested in that. This is far too aggressive. This is earning money to pay the mortgage, not earning money to make people long term. They're not interested in this sort of stuff. Unfortunately, it would be nice. Right. I've got nothing else for you this morning. There's nothing to look at. Literally, there's nothing to look at until 1:30. So I'm going to be hovering around. I've got the US dollar CAD, which I will be locking in profit on. So I might put the trailer on that now, actually. Let me just pop that on. 150. Call it 200. So just going to put a trailing stop on this position. I'm going to put a trailing stop on this one as well. Okay. So both of those positions on the US dollar CAD, that one at 507 and that one at sort of $60 odd. Just in case we get positive CPI news and this thing flies. If it does, there's no point in taking drawdown on that. There's no point in not banking that. I will add the positions back on. Yeah. So trailers on those. If CPI comes out as negative and we get an ADR day, happy days. I'll bank what I bank out of it. Yeah. US dollar, pound US dollar. I'm getting close to getting this aggressive DD control position on. If we get a positive US dollar, this is just going to go down. That's not going to trigger. If we get a negative US dollar, that's going to trigger the aggressive drawdown control position. And obviously, I will then evaluate where my average gets to as to what happens this afternoon. But 125 ADR on the pound US dollar is this high, previous low. So we know this is a decent level the banks are interested in trading at. So we may well get that reaction off of there and just stay sideways. So we'll see what happens. But all kicking off at 1:30 this afternoon. Can you look at pound odd? I can. So pound's a bit tricky at the minute, isn't it? We don't know what's going on with the pound. So we've broken down below support. That has now become resistance. So at the minute, we're kind of day 3 into not sure if we're going to drop or pop back from here. There's no extensions on RSI. No reason to take any trades on it at the moment. Obviously, the pound's come down this morning off the back of the GDP figures, but just popped straight back into that low from, where are we? Monday. So we've bounced off that low from Monday. More of a long than a short right now from a technical perspective. From a fundamental perspective, I'm waiting for Bailey to confirm, but I think probably we might see some weakness starting to creep in this pound now. We'll see, but it's all undoing. Look, I mean, this is completely undone, virtually undone. Yeah, so this negative GDP we had this morning, not really negative, is it? Otherwise, we would be tanking. So the market's not too worried about the GDP figure. Kind of expecting it, I think. But we'll wait and see what happens with CPI. We might get some more movement kicking in off of that. So with the DAX, obviously stuck in a hedge at the minute on the DAX. So plan on this today, as you can see, is to come back down into these weekly supports. If we get back down to these weekly supports, that is now ADR low as well. I will take a long out of ADR and out of that level. If it pushes up, I'm looking at this area here. As a resistance, which is ADR high, which is 4R. So I'll take a exit on the longs there and then look to get out when the market drops back after that rally. So if market structure does this today, I will be out of the longs and out of the shorts. And whatever I get. Just a quick update on this version, this new EA I've been developing for the hedging. It's 90% finished. I started some back testing last night to run it overnight. And it was all going swimmingly. And I got about a third of the way through the back testing and went to bed. It had been running for about 3 or 4 hours. Great results, loads of positive return. And then Windows did an update overnight. So I woke up this morning to the login screen. So I've got to restart the whole bloody test again. It was an 18-hour test. So I'm going to let that run today. And I need to get a full test done on all the main system parameter permutations that I want to test for the hedging strategy, which is basically trailers, TPs, loss recovery calculations, etc. So there's a lot of stuff I need to test. And then when I've tested it, I need to visual back test it. And I need to do some further testing as well on other bits and pieces. But it's kind of finished to the point I want it to be at the moment. I had a tick list of everything I needed it to do, and it now does it all. Whether it's right or wrong to have it doing these things is what I'm testing. So some of the functionality I've put in there, it might just prove, don't be stupid, that's not going to work, and it will be removed. So I've got all the testing to do. So there's a good couple of days worth of testing and results and all sorts of stuff to play around with. I'm live testing it, obviously here now. This is the first day live testing the final version or the new version. And I'm testing it on my live Prime account as well, mainly because I need to test execution, speed of execution. And obviously live accounts vary. Demo accounts, you get a totally different execution on. So I'm only testing live. So I'm basically, I need some scenarios to play out real-time forward testing as well. So like today, prime example today, the EA has placed the trades, got into the hedges, automatically adjusted the TPs for me, which is great. I have now manually adjusted them. So I just need to make sure that my manual adjustments kick in. So I need this to do this. If it doesn't do this and it just stays in this hedge today, I've got to scrap this test and start again and have the same scenario I want played out, play out again live. So there's all sorts of live forward testing I need to do to make sure it works, because obviously there's no point in releasing it if it doesn't work. So yeah, so that's where I am with it. But I got a load of work done yesterday on it, which is great. And I'm pretty much finished, I think, with everything I need to test anyway. Now I'm going to test it and it's going to go, that's a load of rubbish. But the results are great. Look, this is a 100K account. So it's produced 160K profit on a 100K account. I think it's 8 months I tested. Where am I? So I'm testing from the 5th of January to the 19th of August this year only. So it's only an in-sample test as well. I haven't done any out-sample testing yet. But it's 8 months. So it's produced 160K in 8 months off of a 100K account using 1% risk per entry. So, and obviously you can see the results vary from 160K down to worst case scenarios, probably break evens, aren't they? But, you know, 20Ks, 30Ks, 50Ks, 80Ks, 100Ks, these are all system parameter permutations. So it doesn't matter what you use as a setting, they all produce money, which is what we're interested in with system parameter permutation tests. So, but yeah, so I've got to do that again. Windows. Why? In the arse. Anyway. I like you saying just money to pay the mortgage. With indexes in a year, you would buy a whole house. Yeah, you could do. It's all down to risk. Isn't it? I mean, at the end of the day, with scalping, with a system like this, with a strategy like the opening range breakout strategy, and with hedging, you don't need to risk 1% of your account, because it's not often you get a losing run that is sustained. So especially with this hedging variation on the open, because you are always locking in a maximum loss. You can't lose more than your hedge. So the very worst case scenario for the vast majority of the trades hedging is a loss of X. And you can specify that X. So if you had a 10 grand account, you could specify that X as 2,000, which is 20% of the account. If you trade 4 indices, unlikely all 4 of them are going to do the same thing. I haven't had an instance live testing hedging in the last, month or so that I've been testing it. I haven't had an instance where every single one of them, I don't think, has ever got hedged at the same time. As long as one of those plays out, you're going to eat away 2 of those losses. So the worst case scenario is you get a single hedge loss on the day, which is why, people have been contacting me in Telegram saying, I haven't seen you lose yet. Because I haven't. It's just, I haven't lost because I'm trading 4 indices, and you always get a break on one of them. Yeah, like yesterday, the Dow went mental. The S&P didn't go as mental. The NASDAQ got hedged, or would have done if it had triggered, but it didn't because the rules it was outside the parameters of the rules. But if one of them gets hedged, one of them goes mental and the other one gets there slowly, that's a 4R return and a 2R loss. You can't lose. You can lose, obviously. You can lose if all 4 get hedged, but I haven't seen it yet. And again, with my testing, I'm just testing DAX. I've got to go back and retest NAS, S&P, and Dow, and then get an accumulative result as well to test. So there's a lot of testing to be done, but yeah, I mean, it can be pay the mortgage money, it can be buy a house money, but it's all down to your comfort level. If you've got a 10 grand account and you want to risk 10% per index, if you have all 4 indices go that day, you'll double your account in a day. No problem at all. But high risk. But then when you've doubled your account, you can draw that money out, pay the mortgage off for 3 months, and then reduce your risk. How do you want to earn money? Yeah, it's a very interesting strategy, hedging, because it gives you that real relaxed feeling. I'm sitting in the DAX hedged now, and I couldn't give a monkeys, because what's the worst case scenario? I've locked in a bit of loss. Nothing bad can happen to me today, but I have 2 opportunities up there and down there. I should really show you what I'm talking about. I have 2 opportunities still now to make money. I've lost nothing today. Nothing yet. If this pushes down to here and bounces off of that 2 weekly low, I'm going to make money. If it pushes up to there and bounces off of this resistance at ADR, which we know it does 58% of the time, or more than 58% of the time, or less than 58% of the time, rather, I'm going to make money. So right now, all I'm asking the market to do is bloody move. If the market moves, I make money. If the market doesn't move, I'm going to lock in a loss. And that loss, by the way, this is now a 150k account. It was a 100k account. That's why that is there. So it's not actually a lot of money based on the account size. 2%. So that's the beauty of hedging. It's lovely. I'm relaxed. I don't care. I'm willing this to go wrong. I'm willing it to move and prove me wrong on my long position, because then I'm going to be right on my short position. And when I'm right on my short position, I'm going to wait for you to profit take that move and get out of my long position I was wrong on, and I'm going to make money. It's fantastic. It's so much nicer than taking a double-ended stop and then going, oh, Christ, I've got to make back 2%. You're immediately under pressure, aren't you? With the opening range breakout EA, if you got a double-ended stop out, you're immediately under pressure to get that money back. With this version of the EA, you don't get a double-ended stop out. You just get time. Fantastic. I love it. I've never tried it before, hedging in this way. I have on position trading, and I hated it, but I find this much more relaxing. And the days it just goes, like yesterday, yeah, where we took yesterday's and it just went straight down to target, pulled back and made me even more money on my second position. Look at that. 20 minutes. I'm done. I've just paid the mortgage. 20 minutes. Great. Anyway, got to test it first. But yeah, you could buy a house with it if you put enough risk in. Money makes money. That's the one thing about this industry. You have to understand, you do not make money without money. You have to have money to make money. It's a business. You can't start this business without a capital. The more capital you got, the more capital you will make. Look at people like, what's his face? Mr. Investor. Got his name. Trades the S&P. Complete mind blank. Oh my God. You know the guy that trades the S&P and makes around about 12% return a year on his billions. Yeah, he makes 12% a year. Warren Buffett. There you go. Thanks, Philip. Complete mind blank. Right? He makes 12% a year, and everyone's like, oh, look at those Darwin X's we just looked at. Yeah. Oh, really? Is that all it makes? 21% a year. Warren Buffett snap his arm off, but that's too high risk for Warren Buffett. Yeah, but 14% return doesn't sound like a lot on a grand, does it? I can't live on 140 grand a year. Stick $1 billion in there. All of a sudden, you're buying a helicopter every day and still not able to spend the interest. Money makes money. You can't trade in this business without money. One thing I can't help you with. I can help you with strategy, but I can't help you with capital. This is why everyone's gone prop. What's happened to prop? Are you taking pre-orders on the EA? No. No. I got to test it all first. But you've seen me trade. I've been trading this live in here for weeks now, the hedging variation. And as people have pointed out, I haven't lost. You know, it's just been one of those strategies that's, and this is partly why I'm kind of a little bit reticent about this. How many times have you heard me in here saying there is no holy grail? Right now, I feel like I found it. I haven't. I know I haven't, because it doesn't exist. But right now, I feel like I found the holy grail, because I've had, I think it's like 9 days now straight. I haven't lost. And I've made a minimum of 2.5% a day. Yeah. So it's great. But this is why I've got to do the back testing. And more importantly, the visual back testing. Because I've seen 35% drawdown on account. So I know there's a big drawdown in there. I know there's going to be losing runs in there. But I need to see if those losing runs are caused by large losses or whether they're caused by losing runs. There's a big difference. If something is hedged and gets me out at ADR and then moves 300% of ADR, that loss is going to be catastrophically huge. If that is the case, we need a rule to stop that happening. If it's a case of it has 5 or 6 trades in a row that lose, no problem. And that, I'm hoping, is what I'm going to find, because I'm expecting the strategy to have a failure point. All strategies do. What I don't want is catastrophic loss based on not using a stop loss intraday. So I've also got to test another thing, which is, do I close end of session or do I close end of day on the DAX? Because we obviously get the US session, which you can see here. That's the Frankfurt session. That's the US session. The US session can also get you out of negative hedges. I've been closing out at end of DAX session, ready to start New York session with the indices. But should you leave this running? Is it better to do that or not? All these system parameters, I've got to test the permutations of all of these. So there's a lot of testing to do, but looking good. It's one of the first strategies I've developed in a number of years where you can probably tell by my voice, I'm excited about it, because it's, for me, it's a comfortable strategy, and secondly, it's profitable. Same as the opening range breakout. Profitable. I just found it a little bit uncomfortable to trade. And this I just find is kind of a little step on of niceness on it. Yeah, Windows got you too. NT doesn't handle Windows updates well. Windows NT? You're not using Windows NT, Brian. Surely. Are you a time traveler? Have you come from the past? Windows NT. You can't be using Windows NT. Unless NT is meaning something else. Network terminal. Do you really see yourself leaving position trading behind at some point? I would love to. For me, trading is a means to an end. I trade to live. I would rather not live to trade. Yeah. If I can find a strategy that can make me enough money intraday, I would use it. I just never have. So all the intraday strategies I've ever tried have had too high a failure rate to make me want to continue with them. Stocks, best trading course I've ever done in my life, Bulls on Wall Street with Kunal Desai. Absolutely brilliant trader, trades live every single day in front of everybody, shows exactly what he teaches, executes exactly what he teaches. I just couldn't do it. It wasn't for me. In fact, I wouldn't mind revisiting it now. Knowing what I know now, I might actually be better at it. But he will make phenomenal amounts of money in a very short period of time on stocks. I would love to be able to do that and work 3 hours, 2 hours a day. Be great. Look at what I've been doing here with the DAX and the US indices. If I can make this make me $3,000 a day, why would I position trade? Because position trading is, well, say that. Position trading, how often have I checked the charts this morning for position trade? You don't have to do anything. This is the beauty of position trading. It looks after itself. It either gets into profit and gets banked, or I need to deal with it. So from a time perspective, I don't need to spend much time doing this. However, what I do need for this to pay the mortgage and allow me to live, i.e. what I would like to earn a month, I need a lot more capital, which I haven't got to do this. So the constricting point of position trading is capital. You need high capital and high leverage. For some people, high leverage is also difficult to achieve with brokers. For index scalping, you don't need high capital. You can make a very high return very quickly and in a very small amount of time a day. However, I'm now hedged in this DAX, so I need to now watch this all morning. So it doesn't free up my time to spend doing other things, which I'd like to do. Some days it does. Yesterday, we were done in 5, 10, 15 minutes. Thank you, I'm done. 15 minutes. And that was on full automation. What I've done now with this new variation of the EA that I finished yesterday is this is now on full automation as well. So when it gets here, if it gets here, or it gets here, it will automatically take additional trades for me to dollar cost average into the shorts and get me out with 25% of whatever I make, or 20%, whichever I've set it at. 20%. So it will get me out with 20% of my locked in loss. So whatever I bank down here, which is going to be something like 8.5K ish, it will come and bank me 20% of that $8,000, whatever it is. Call it 8. Maths. Oh my God, I can't even use a calculator. Someone's going to answer it before me. Look. Oh, I can't even type. 8,000 times 20%, please, equals 1,600. So right now, the EA will automatically try and make me $1,600. My mortgage is 1,650 quid. In one session. Don't forget we've got the afternoon as well. Yeah, that's the potential of it. But I'm using fairly high risk on this. I'm using 2% risk per entry. So in real world, I don't have to use that much either. Got a lot of potential. Don't forget you are using useless retail candlesticks. I'm using everything I'm using is useless in retail. I bet Nirav would prove you wrong. Yes, he would. Good old Nirav. FT Plus is a good prop. FT Plus? Who's that? Never heard of them. I was going. Oh, funded trader. No. Just no. You know who these guys are run by, don't you? They're run by a company that sells a course. No. Totally misaligned. Targets, whatever you want to say. 4 indices, 16 permutations. Chance of all 4 being hedged and losing equals 1/16. It's a 6.25%. Right. Thank you for that. So there's a 1 in 20 chance of you getting fully hedged a day. So those are good odds, aren't they? Yeah. 1 in 20 chance of it going really wrong. And 19 in 20 chance of it not going wrong. It's all about long term as well, yeah? So all your account has got to do, whatever you put in, if you put in 10,000, right? All your account has got to do is survive. Yeah, it's got to survive the drawdown. If the drawdown doesn't come on day one and that suddenly becomes 30K in the first month, you don't have to worry about drawdown anymore. The only time you need to worry about drawdown on any system or strategy when you start it is from day one. If you hit that losing run on day one, that can be catastrophic. So you just need to factor in the maximum drawdown that you've experienced during backtesting with the parameters that you're using and the account size. Because as long as history repeats, which we know it doesn't, but as long as it's roughly around what history's done, you've just got to survive that initial move. If, for example, so let's say, for example, I'm going to make $1,600 on that one. If I started with a 10K account, yeah, when that moves all the way down there, I'm going to make 8K on that. Yeah, which means my account equity is now 18K, but I'm also going to be in 8K's worth of draw, or 6K's worth of drawdown, or whatever it is, or, 10K's worth of drawdown. So my account actual is 8K. As long as that doesn't push, I'm fine. If it does push, there's a chance I could really get hurt, isn't there? As long as it does that, that's fine. If, when I start with my 10K account on day one, the DAX goes to a 2R, banks it, and then moves up to a 4R and banks it, I'm sitting pretty on something like 13K. If all 3 indices in the afternoon do the same thing, in day one, I could be sitting on 20K. Then you can reduce your risk or withdraw that and pay your mortgage for X half the year or whatever. You can go into any strategy with low risk or with high risk. When you've got a strategy that has a high strike rate of being right and a low risk parameter because of a hedge scenario, i.e. not multiple stop outs where you could lose 5% of your account in one session or 5 trades in a row in one session, you can actually be more risky with it. And as JC's just pointed out, I'll have to do the maths on those odds. But yeah, if it's 6.25 for getting all 4 hedges, I mean, I say I haven't had one yet, have I? You've been watching me live every day. I haven't had a hedge on it every day on every instrument. I've had a hedge on a couple, but the other 2 have played out. So it's immediately you're in profit. If you just closed both those hedges, you've won. You can't, say you can't lose. I'm not using that word because you can lose, but it's harder to lose. You have no check. You have to have checklists with your rules. Yeah. Do you have a news filter indicator? No. I work with ORB with my rules. Some days win, some days don't. Yeah. Some days it feels like Windows NT. Yeah. Morning, Great Filibuster. You're very late. I'm just about to finish up. Funded Trading Plus, not this one. Smart Charts, Dallas. That's the swear, Smart Charts. Let's see how much makeup we've got on the Smart Charts website. Where's Greg? Where's Greg? Why is his face not all over this? Blimey. This is Greg Secker's software company. Isn't it? Isn't it Smart? This is Smart Charts. Is Greg's, isn't it? Isn't it? Am I getting this confused? Or is this a different company? This doesn't actually look slick enough to be Greg's. What's Greg's one called? I'm sure it was Smart Charts, wasn't it? Smart Charts. Loading. Still loading. Good one, Greg. He obviously had a Windows update. Oh dear. Greg, company's going pot. Yeah, there you go. Smart Charts. There's the logo. Smartcharts.net. Oh no, it's reloaded now. Sorry. It's working again now. Oh, it's probably because in the stream we had 3 people click on it, so it can't handle the load. That's probably what it was. But yeah, this is Greg Secker's company, so I'm a bit surprised his face isn't all over it. Maybe he's trying to separate himself. Anyway, yes, don't use Smart Charts. Don't do that unless you want to spend $5,000 learning how to trade and using his software package and then trading with his brokerage and making him buy another Rolls Royce. I think you've been using position trading for years. I'm only just now falling in love with it. So the way you talk about RRB is the way I talk about position trading. Yeah. I don't think I'd ever stop position trading because it's a regular income. In fact, what I would probably do if I can get the ORB strategy to make more money, I would invest more money into it. I've put a lot more of my own capital into forward testing on it. And if it proves that it can make decent money reliably, then I will pull more out of that to put into position trading and grow my position trading balance. I'd love to do that because position trading is just so much more relaxed than any other form. Not having to care. If I can become Warren Buffett, Warren Buffett, if the S&P drops by 3 or 4%, he's sitting there going, meh. It's dropped by 3 or 4% because he knows it's going back up again. But making 12% on $1 billion is more money than you can spend. If I could have a $250,000 position trading account or $500,000 position trading account, you don't have to do anything, do you? But where'd you get the money? I did the course and they just pushed you to put money in. Yeah, exactly, Dallas. That's exactly what they do. Learn to trade. Greg Secker is, I have nothing wrong with him. I don't know the guy. I've no idea about his trading background or what he does, how successful he is in trading or anything. What I know is he runs a trading course, he sells software, and he has a brokerage. And when you join his course, he gets you to buy his software and trade on his brokerage. Where do you think possibly that money to buy the Rolls Royces, the helicopters, and the houses comes from? Trading revenue? Trading education, software, brokerage. Just putting it out there. I don't know. I'm saying here, I have no idea how he earns his money. I'm just saying there's 2 ways you can make money in this industry, isn't there? And I know people that have done the course. I've never done it. So I can't comment on how good it is, how bad it is, how good the software is, how bad the software is, how good the execution on the broker is, or how bad the execution on the broker is. All I'm saying is I know people that have been on it and they haven't learned anything that you can't learn for free on the internet. He said, the hell with trading and started wild swimming professionally. Yeah. And you have to say, anybody that puts out that many adverts on YouTube, I don't advertise because I trade. If I was just selling courses, indicators and stuff, I would be advertising in your face non-stop. But that's not how I make my living. Yeah, if you're a massively successful trader and all of your revenue comes from trading, why not show that and tell people that? Yeah, it's honest, isn't it? It's what I don't know. Everybody's different. He went bankrupt. Who went bankrupt? Greg Secker went bankrupt, did he? Everything they teach you can be learned on YouTube. Yeah. That's what I'm saying, Dallas. I've got a video on my website. Yeah, this one here. Go and watch this. I'll put it in here now if anybody wants it. Go and watch this. You probably know this already, but this explains the problem with trading education and why you need to stop buying courses. It's exactly what it says on the thumbnail. Yeah, every single course teaches you a strategy that tells you to place an order in the market to lose you money. And every course you ever learn teaches you is how to do the same thing in a different way, using a different indicator, on a different time frame, on a different instrument. It just packages up education, how to lose money in the markets, in a different box every time with a different color, and sells it to you again and again and again and again. You can learn how to lose money trading for free, online, on YouTube, all over the place. Stop buying the same thing. It's just pointless. If you want to learn how the markets work, go and watch my bootcamp. Totally free, teaches you how it all works and teaches you the best way, in my opinion, to do it. I'm not saying you're going to make money out of it. I'm teaching you how the markets work and how I make money out of it. You can give same course or same strategy to 100 people, you will get 100 different results. But stop paying for the privilege of being told the same thing over and over again. And that's the problem I have with not so much Greg Secker and Nirav and all these people that have these secret courses and these special ways to make money out of the markets. They buy their houses through courses, through selling education. Yeah, it's a different thing. But it doesn't make you money. I've been on hundreds of courses, not hundreds of courses, but a lot of courses. I've done pretty much every course you'll find out there. None of them made me profitable. Not one. That's in bootcamp day one. I tell you exactly what my background is. I'm not a trader. I've got no financial experience. I'm a programmer. Yeah. I have just figured out how this thing works, basically. I'm sure there was a slide about me. Maybe not. I don't know. But yeah, all the courses are going to do is tell you how to do the same thing wrong every time. Mental. But you don't realize that until you've bought them. Yeah. Once you've bought your 5th course, I think, once you've spent, the courses come in different sizes, don't they? $100, $200, little course. Yeah. Learn some information. Brilliant. Then you've got your courses, your 1,000, your 2,000, your 5,000s. When you've bought 3 or 4 of the 1,000+ courses and you realize you're still not making money out of it, that's when it drops. It's like, I've now spent $10,000 learning how to do this over X years and I still can't do it. That's the light bulb moment. What's wrong? You're doing it wrong. That's when the light bulb comes. Speaking of bankruptcy, Birmingham City announced they're bankrupt. I know. There's a lot of councils going bankrupt in the UK at the moment. Mine's one of them as well. It's on the list. There's a list of the top 20. Slightly worrying. As long as they keep collecting the bins, I don't really care. Roman, you're doing a great job. Don't you think to have a trading room with a subscription? No. It's your time. You have a very healthy approach to the market. But this is the thing, Roman, right? I'm doing this because I make money doing this. I've got to do this. So why not try and show other people how to do this as well? I don't know if you've done the bootcamp or not, Roman, but if you go and watch the bootcamp, I was a losing trader for years and years and years. I found somebody on Forex Factory who mentored me for free, who was a very experienced trader and taught me everything he knew and spent hours and hours and hours with me teaching me how to do this. His parting words to me when I left him to go and learn Elliott Wave were, just make sure you pass it on. Because if you can make money in this market, you've cracked it. You know how to crack the market, not the strategy you need to buy. You know how the thing works. That's the important thing. That's what I'm doing, is I'm showing you how this thing works, and I'm explaining every day what I'm expecting to happen in the markets. I have no clue where this is going today. That's the key. I don't know where it's going. I know how to extract money from it. And that's what I'm showing. Yeah, I produce products which help me do it. I built them for me. They take time and money to operate, which is why I charge for them. I don't charge for any of this, and I don't need to charge for any of this. I don't think you should be charged for learning how to trade. I'm passing on information that you can get freely available on the web. Why should I charge you for it? I'm spending my time trading. I'm watching this. The reason I'm talking to you is because I'm waiting for the DAX to move. If I shut down the stream right now, I'm still going to be sitting here waiting for the DAX to move. So why not sit here and talk to people? That's my opinion on it. If the phone rings or the doorbell goes, I'll have to go. But I've still got to do this because this is how the bills get paid. Yeah, it's a different thing, isn't it? To people that make their living and pay their mortgage by selling you a course or a system. They have to have a trading room with a subscription. If it got to the point where I was suddenly sitting here and there's 4,000 people in here and this chat moves so fast I can't read it and I can't help anybody, then I might go, right, I'm going to come in here. Yes, we'll have a laugh. I haven't got a clue what anybody's saying because this thing's scrolling past so fast I can't really answer your questions. If there's anybody that really wants to learn how to do this, I'll cut these streams short after an hour and we'll spend 2 hours doing it properly. That is when I would charge a subscription because I'm going to be doing it before my time. If I want to, and if I need to. But the best thing you can do is pass on, in my opinion, this has been a hell journey trying to figure this thing out for a decade of my life. I'd much rather pass on how to do it and cut someone's journey down by 5-10 years if I can. That's what someone did for me. And I did have a subscription for the live room, which was $49 a month. I charged $49 a month. It wasn't really to make money. It was just to cover the hosting costs and all the other stuff I had to do. I had a license for creating videos and protecting them and, just paying overheads. All these other guys out there that are charging £200, £300 for their trading rooms, do you think they're making money trading or do you think they're making money out of your $200 to $300? Imagine this. You've got outgoings of $4,000 a month. If you got 10 people to pay you $400 a month for a live trading room, you don't have to trade. You sell a course for $1,000 on how to lose money. Someone's doing this. Yeah. There's a guy that runs a Telegram channel I'm looking at now, who sells you a course and tells you in the course that this doesn't work. $1,000. You pay him for something he tells you doesn't work, and people are paying him money for something that he tells you doesn't work, and you're still bloody buying it. Not you, but people are. And he makes his money out of doing that. And then he posts a load of charts. And when he's making money, he boasts about it. When he's not making money, his channel goes quiet. Totally silent. Nothing. No profit, no new setups, nothing. Then all of a sudden, something will work and it'll go, hey, that trade I told you about 3 weeks ago, it's worked out. What happened to the last 3 weeks, mate? Forget about that. That's what this industry is about. Not Mamba. It's not Mamba, Brian, but yeah, I don't know Mamba. I've never looked at his content. I've never watched any of it. Right? I have never watched any of it, but there's a reason I've never watched any of it, because when I look at a channel or a person, the first impression I get is important as to whether I think you should be using that person's information. If you're a professional trader wanting to make a living out of this job, would you follow him? Or would you think if you want to learn how to rap, you would follow him? Yeah? He sells a course, right? I'm not being funny, but this is what this industry's turned into. It's a bloody joke. It really is. When people like this are trying to sell you education on how to make money out of the Forex markets. Not the real world, is it? But people are falling for this. It's sad. But that's why I do what I do. But that's the reason I've got 80 people in here, because there's not many people that want to know how to do this properly. What people want to do is get their Lambos and be happy with their Lambos and earn their Lambos in a month, pay off their mortgage, never work again, and live on a desert island. That's what everybody wants, isn't it? Out of education and trading, they want to learn how to earn a Lamborghini this month. And this is what these guys do. They go out, they rent a Lamborghini for $300. They stand in front of it and go, "Hey, look at me, I'm a trader." No, you're not. You're a guy that's got $300 on his credit card to rent a Lamborghini, take a photo, and hopefully make that $300 back in a trading course. God, it's rant day today, isn't it? It's good. But you have to admit, Greg Secker's face is a lovely shade of orange. I know, it's great. I love to look at him. I don't have a problem with Greg. Of all the education out there, his is probably the highest quality, I would say. So, I've never done it, so I can't really comment. 100 to 1.6 million. Yeah, all these challenges, let's turn I remember last August. In August, yeah, I stuck 10 grand of my money in an account, and I said, I'm going to do a 10 grand to 20K challenge. Let's see if I can double it in August, because August is going to be quiet. I said, I'll trade support and resistance lines. I got bored doing it, and I made 19%. Getting bored doing it, right? I didn't manage to do it, but I could have created a series on it, taken it seriously. And if I had have turned that 10 into 20, I could have sold the information on that to everybody for $1,000. I don't want to use the word gullible, but people just really need to wake up. Do you honestly think you can learn how to do this in a month? Yeah. Brain surgeons take longer. Pilots take longer. I'm just about to get triggered on my aggressive drawdown control position on the pound US dollar. We've just basically returned to origin, V-shaped recovery. So this move on the pound market did not want to continue it. Council needs to put more of those cameras up, finding everyone for driving their old car. Yeah. Or using their mobile phone. What was his name on FF? Forex funds. What? Forex Factory. What my mentor, his name was Strat. He's still around. He's PASR basically. I can't remember the name of his thread. Okay. But do not expect his help without spending 6 months reading this. He won't even talk to you unless you've read this. I'm assuming he's still around, right? So what you've got to do, if you want to follow Strat, I've taught you everything Strat knows. Strat's taught me. This is where I get these moving averages from. Yeah, this is called the Strat Shadow. These moving averages. This is not what he uses. He uses something totally different. But I've adapted these moving averages for the daily time frame. But basically, it's literally just price action at support and resistance. PASR. Long-term stress-free trading. Uses a stop loss, but teaches you how this thing works. But I teach you how this thing works in my 12-hour course. So what you've got to do is read all 862 posts on this thread. Then you've got to go to this thread, which is the original thread, and read all 1,087 posts on this thread. If you're lucky, then he might talk to you. If he's even still around. I mean, he's getting on Strat now. Are he still there? Still doing it? Yeah. Volume on his charts and all sorts of stuff now. But simple 2 moving average. Trend-based, price action, support, resistance. All it is about, support, resistance. That's all you need to know in this market, which is why I am looking for a bounce here and I'm looking for a bounce here. Price moves to the levels it used to move to before. And then we have a break in structure, which is something else I learned elsewhere. market reversal alert at a level of support and resistance or at a level of extreme extension, which is an RSI. Yeah, that's all it is. Just waiting for the market to move up and down. But seriously, if you go onto that thread, you will never come out. You'll be there forever. There's this guy on YouTube called Lord of the Signals, which copy trades signals of all the Forex gurus, but he copy trades opposite to the signals, and he is very profitable. The trouble with that is, I've gone down that route in the past where you get a system that doesn't work and you do the opposite. The problem with that is, if you have a system that says get in now and go long with a stop there and a TP there, and you go short, the difference is with your short that you're taking, where's your TP and where should your stop loss go? This market is going to move at random like that now. Yeah. So if the system or strategy doesn't work because the signals are crap, it's not going to help you by reversing the entry, because the thing that makes money in a strategy is not the signal, not the entry. Every single one of the candlesticks you see on this chart now has exactly the same odds of going up or down. And the preceding candles after that, or the candles that come after that, have all got the same odds, 50-50. If something's bullish, the next candle could be either bullish or bearish. So 50-50. If the next candle is if that candle's bullish and that candle's bearish, the next candle, what's the odds of that one being bearish or bullish? 50-50, right? What makes money is when you enter the market and where you get out of the market is bigger than where you would get out of the market with a loss. So reversing a signal is very difficult to make profitable, because you can't just reverse the stop loss and the TP, because the stop loss and the TP will be strategically placed because of price action if it's a decent strategy. That doesn't work when you flip it the other way, because the price action proceeding is going to be different, isn't it? So it doesn't work. I've tried it. I've found loads of strategies and I've back tested them and gone, they're crap. What if I got it to take the opposite ends of the opposite trade? Still doesn't work, because this thing moves up and down at random like that, and you're going to get stopped out if you use a stop loss. That's just the way it works. But I'll have a look at it. Lord of the Signals, it's called, is it? Lambo Rowell Signals. See, this guy's just a viral YouTuber. He's only got 1,500 subscribers. Oh, and he only does shorts as well. That's really annoying. Just viral crap. I wouldn't put much faith in it if I were you. Mr. Nick Sean, AZ. I didn't mention any names, did I? You came to that conclusion on your own, AZ. I didn't mention it. You did. Was I potentially talking about someone who sells a course which tells you how to lose money for $1,000? I didn't mention any names. I'm embarrassed on how much money I spent on courses, EAs, and signals. If I'd found your channel 2 years ago, then I would be completely in position. That's why I'm doing what I'm doing, because I've been exactly where you are. Much nicer if you don't have to spend all that money, wouldn't it? Man, but FX is a big show off. I've never watched any of his content. I don't have any. Don't want to watch it. Fooling people around and sell them signals and courses. Give me a shout if you want your Lambo cleaning. I haven't got a Lambo. Real world trader. I've owned 4 Porsches in my life. 2 Boxsters, 2 911s. One of them, a lady decided to hit me head on at 90 miles an hour. That one doesn't exist anymore. Replaced it with another one, right? Every Porsche I've owned has been a minimum of 10 years old. Yeah. Real world trader. I do drive Porsches, but my Porsches cost 25 to 35 grand, not 250 grand. That's the real world owning a car. And every time my car goes into the shop, I need to trade, because every time it goes into the garage, it costs me £2,000. Doesn't matter if it goes in just because there's a nut come loose on the bumper, it's £2,000, because something else will be wrong with it and they'll charge me £2,000 if I don't need the brake discs replacing, in which case then I come out 4 grand lighter. Now do you see why I need to trade? If I owned a brand new Porsche, I wouldn't have any of those bills. But then again, I've got to find £250,000 to buy one. Well, 150 grand. But anyway, this is the real world, yeah? Someone's going to do me a picture of me in front of a Porsche now. Learning by my own mistakes. For me, the most dangerous is gridding. Yeah, gridding is a terrible strategy. Tried it, can't make it work. The nice thing about watching me is you name any strategy, I've done it. I've tested it. I've built an EA to back test it. That's what I do. I'm a programmer. So basically, whatever you can throw at me, I have tested it and I have proven it not to work and I have moved on from it. So anything you chuck at me, I can say, this is the pitfalls of it and this is why it doesn't work. And it's not to do with because I wasn't very good at it. It's to do with logic and maths and the fact that it physically just does not work long term because of X, Y, and Z. Throw it away. Try the next thing. Throw it away. Try the next thing. And that's what I've done all my life. And this is why I do what I do, because these are the only 2 things I've found that work. Volatility at a specific time that you can predict, because you can't predict the future movement. You can predict when the movement comes. And the fact that we can't predict the future, stop using the thing that makes you lose money, the stop loss. Those are the only 2 things I can find in trading that actually work long term. That's what I've got on my website. None of that other crap. Another buff master on YouTube. Have you thought about turning the Porsche electric? I came that close to buying a Taycan, but I actually bought the BMW iX3 instead. I've got kids, so it was a toss-up between the Taycan or the Taken, whichever way you want to say it, or the electric family car. But I am electric. I've got an iX3 BMW. But I was going to buy the Porsche, but it doesn't work with the dog. I'd have to put the dog in the boot, and I didn't think that the dog would like that very much. So I had to get a sensible car. You've got to have one sensible car and one totally rude, stupidly expensive, crazy car that sits on the drive 90% of the time. And when I want to move it, it's not driven for ages and tends to go wrong. That's typically how you run 2 cars. Which of your strategies would you recommend for prop challenge? None. They don't work, do they? We've proven that. ORB, Neo, opening range breakout is the one you want to use for prop. How long does it take to learn the MQL coding language? I've never coded in my life. Do a course. That's impossible to answer. How good are you at picking up stuff? Yeah. It's the same as anything. You can give people 10 people a course. One of them will do the course and suddenly code it. 9 of them will go, how do you do that again? It's impossible to answer the question. Programming is, in my view, with programming, you need to learn 2 things. One is the basics. Yeah. How the language works, how to structure functions, how to structure things, how scripts run, what parts are in scripts. So in MQL, for example, you've got a bit where you put the inputs, you've got another bit which starts the initialization, and you've got the main thing that works on tick, you've got something that works on trade, you've got something that works on this, that, and the other. These are the basics. Then you're going to need to do something specific, like I need to measure the distance between 2 trades and store the lot size. That won't be taught to you in the course, so you're going to need to look that up. So you need to learn the basics. And then the second part is, now I know how to build it, how do I know how to code the thing I need to code? Because there will be 500 ways to achieve the same result in programming. You could build arrays, you could build variables, you could use the system global variables in the MetaTrader terminal. You could do all sorts of things. You could store something or not store something. You can store it using a candle high, you can store it using there's 100 ways to do something. So once you've learned the basics, you then need to figure out how to do what you want to do. That's a totally different thing. So you can do courses to teach you stuff, but you will use AI and Google to learn what you need to learn to make the thing work. So, for example, if you want to measure what's the easiest way to store to measure a distance between two things, you could store two variables and then measure the distance between them. And then if I measure the distance between them, I need to account for whether there's 1 digit or 2 digits after the decimal. So therefore, how do I do that? Put that question into OpenAI and it will give you the code. So you take that code snippet and you pop it in there, because you won't have learnt that in the course. Yeah. I spend most of my time coding, going, how do you do that? Oh yeah, copy paste. Real world, that's how it works. Hard. The biggest problem you have is bug testing, is bug fixing. Something doesn't work. Why doesn't it work? I don't know. Let's have a look through these 35,000 lines of code and figure out which one I left the semicolon on. That's what real coding's like. It's not fun. What do you think about the Porsche Panamera? I've looked at Panameras, buying a Panamera a few times. I'm just not sure. The new one's nice. I really like the shape of the new Panamera. It's good, but the Panamera I can afford. Right? Look at the butt on that. The Panamera I can afford, I don't like as much because I can't afford a new one. That's the one I want. Well, that's a turbo. Undecided. It's a bit like that Ferrari they made, the four-door Ferrari. No, for me, a Porsche is a 911. Always has been, always will be. I've got 996 and 997, which are the last of the air-cooled non-turbo Porsches. 997 is the pinnacle of Porsche. 997, C4S or turbo. Those are the ones you want. Dog could drive and you could chill in the side passenger seat. Yeah, have you ever been in a self-driving car? My iX3 does self-driving. Not full self-driving, but it will do all the lane changing. It will do all the speed. It's got the sensors on the front so that it knows how far you are away. It will not let you change lane if there's cars coming. It knows where all the cars are around you. It does all of that. It's great until you get to a roundabout because it's following the car in front. If the car in front goes and it's not clear, you go. So I'm not interested in letting the dog drive just yet. I wouldn't even let the dog drive a Tesla, even though the Tesla can do full self-driving, because they tend to run into bridges at 70 miles an hour and explode. So I'll give it a few years until I think the dog is quite ready to take the helm. In which case then, yeah, it doesn't matter what car I get, does it? Any updates on the new hedging EA? Yeah, it's finished. I've got to do all the testing. Testing, which is, funnily enough, what I'm going to go and do now. So I'm going to leave it there because it's 25 past 10. I've been on for 2.5 hours. Yeah, I'm just watching the DAX. So just before I go, I'll be back at 220 for the New York session. But the DAX looks like it might be a loss today for me because I missed my exit at the gap fill, which I should have taken. And it doesn't look like we're going to get enough movement to get out. What I want is another leg down. So ideal for me is going to be that. And then I will exit and re-long. Other than that, might be a loss today. I'll get it back this afternoon. Okay, so I will see you guys later. We'll update you on the DAX. I'll post in Telegram if there's any changes on the DAX, but we'll see how we do with the US indices this afternoon. So I'll be back this afternoon for that. Anything you need, I'll be in Telegram. Other than that, have a good day, and I will see you guys tomorrow. Don't forget, 130 US dollar CPI. That's when it's all going to kick off. So movement 130 today. All right, have a good one. And yeah, see you guys this afternoon. If not, tomorrow morning, 7:50.